Mortgage interest rates near 4%. There's reaction and then there's overreaction. Right now, I am hearing the fear of interest rates going through the roof. We ain't even gonna touch the roof, guys. How you doing? It's Larry Gonzales. There ain't no sunshine in the housing market right now because there ain't no more homes. All right, and that's what we're gonna talk about today for the Mortgage Market Minute. I need you to like, subscribe, comment. All right, see you there. The big three, let's do it. Rates. Rates are up. Inventory. There is no inventory. Prices still going up. All right, now let's break it down. Let's talk about interest rates. I tell you what, last couple weeks have been brutal for interest rates. Matter of fact, I saw a headline from a mortgage newsletter I received, and it was on Wednesday. Mortgage interest rates near 4%. And what have I been saying? Well, we got there a lot quicker than I thought. But you know what? There's reaction and then there's overreaction. And I think interest rates shot up earlier this week, and I think a lot of it was overreaction to everything that's going on. And there's so much going on, right? We got Omicron, we got inflation out of control, we got issues, really all over the world. You look at Russia, Ukraine, you look at stalled Build Better Back America, stimulus plans. There's so much going on right now. And I think sometimes the market just overreacts. And I'm not that kind of guy who likes to overreact. I like to take a step back and see what's going on. And you know what? I think people realize that we went up too fast, and the last couple of days they've come back down a little bit. So what does that mean? What does that mean? Interest rates near 4%. I haven't locked a loan at 4% yet. All right, we're still high 2s, low 3s. It just really depends on who you are, what your credit score is, and what your goals are. Right now, I am hearing the fear of interest rates going through the roof. We ain't even gonna touch the roof, guys. All right, and what is the roof? The roof would be if interest rates got so high that people were going to stop buying. That happened in 2018. Rates got up into the 5 percentile range, all right, 5% interest rate. The housing market slowed down. Didn't crash, but it slowed down significantly. All right, we're not going to get the 5%. We might get up to 4%, and that will slow the market down a little bit, but it's still an awesome interest rate. Matter of fact, before COVID started, January, February of 2020, interest rates were where they're at today. They were in the low 3s to low to mid 3s. And I know personally for my business, man, I was on fire. I had purchase contracts coming in left and right, all right, with the rates where they're at today. Okay, now, in the 2 years, we've had much appreciation. All right, interest rates drop, but now they're back where they're at. Is that a bad thing? You know what? It's going to knock some people out of the game because of fear. They're going to think they can't afford this home, all right, that they are looking at buying. But I am here to tell you the interest rate that you have today probably not going to be the interest rate you have in a year or 2 years, because interest rates, while they are going up now, once inflation starts to come down, and it is going to come down, interest rates are going to come back down. And that's going to provide you an opportunity to refinance. All right, so still a really good rate market. And remember, your historic interest rates are average is about 6%, and we've just been really spoiled for the last couple of years in the 2s. And I think the 3s is normalcy, all right? Now, I don't think that's going to stop our housing market from going up. Now, if we get above 4, then we'll come back to the table and talk a little more about that. All right, so inventory. Whew, baby, inventory's hurting me. Ain't no sunshine, ain't no homes. Ain't no sunshine, ain't no homes. Boom, 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 boom. A couple reports come out this week, all right? Existing home sales. All right, for the month of December, down 4.6% month over month. Year over year, down over 7% year over year. Inventory is 14% lower now than it was a year ago. No listings coming your way. Boom, 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 boom. Right now, there's about 910,000 homes inventory on the market right now. In 2007, right before the bubble burst, there were over 3.7 million homes on the market. All right? But there weren't 3.7 million buyers then. There's probably 3.7 million buyers now, but they're all trying to buy that $910,000 homes that are on the market. Ain't no sunshine, ain't no homes. I got pre-approved with all my homes. Ain't no homes that go away. Boom, boom, boom. I know you want a home, but they ain't coming out of the sky. Ain't no homes. Big supply-demand issue here, and that is not going to change. All right? Here's another thing. Housing Market Index came out this week, and this is the National Home Builders Housing Market Index, and basically it is a pulse from home builders on their confidence level. All right? This is a 0 to 100 scale. Anything above 50 is an expansion or positive. We actually dropped 1 point from 84 to 83, so still very positive. All right, but the builders are having issues completing homes. And why is that? Man, it's the same problem we had this last summer and a lot of last year. It's the 3 L's. It's land. Land's expensive. It's lumber. In the last 3 months, lumber prices have jumped up 85%. And that's not the only thing when you talk about material. All the material needed to build these homes, we are suffering because of these supply chain issues and delays. So that, and then labor. We are almost at full employment, and there just aren't enough people to do the jobs that we need in the housing market. People are buying new homes, but there's a backlog on contracts. So we're 44% behind people who have actually put contracts in to actual starting the job of building the home. All right. So you got all these contracts, but there just isn't enough land, lumber, or labor to get started building these homes. 44% backlog. That's huge, and that is really slowing the inventory increase from the new build standpoint. All right, and we're never going to have enough homes built on Oahu. We just are not. It's just a lack of land. The permitting is slow. It's not going to happen. There's just not enough. But on the mainland, this is an even bigger issue right now. So actually, I was talking to a builder yesterday. He said the supply, actually he's a flipper. He said he hasn't really seen too many delays in material for his flips, but really for new builds, it's expensive. And if you're a home builder, you want to make money. If it's costing you 85% more to buy lumber now than it was 3 months ago, are you going to be in a rush to build more homes? No, you're not. All right, hence the delay in actually starting the builds on the contracts that have been signed. So prices. What's going on with prices? Well, they're up all over. All right, it's more expensive to buy a home now than it was last year. Those prices are gonna keep going up. But you know what? It's also more expensive to rent. All right, across the nation, CoreLogic, they came out with their report last year. This last year, rents have risen 11.5%. All right, and you've seen different numbers. Hawaii, I think, 17.8%. I think Hawaii is actually higher than that. All right, another place that has a high rent increase is Miami. All right, Miami's a little like us. Our beaches are better, but whatever. But they had a 33% increase in rent last year. 33%. It's a lot. That's a big increase. I don't think we're at 33% increase, but I think we're higher than 11.5%. We're probably in the 20% range for rental increases. So is it expensive to buy a home? Yeah. It's also expensive to rent a home. And when you rent, well, you're just giving your money away. That's kind of where we're at with the mortgage market right now. Rates are up, and I don't think they're going to go up much higher than they are now. They're going to come back down, but I think we're going to see a lot of volatility. All right, inventory down, prices up, and it's still a competitive market. I know it's been tough. There's still a lot of cash buyers out there. So numbers with the existing housing report that came out, first-time home buyers. All right, the month of December was really good for first-time home buyers. Went from 26% to 30% of homes purchased in December, existing home sales, were first-time home buyers. Actually, all cash offers dropped from 24% down to 23%. All right, but there's still a lot of cash buyers, and we're seeing that out here too. All right, and then 17% of all purchases were by investors. So that's it for the week. You have a great weekend. A lot going on out there. Don't give up. All right, stay the course. Short-term pain of looking for a home, and week after week is worth the long-term gain of actually buying a home. All right, aloha. Have a great weekend.